Hey, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is November the 27th. Happy almost Thanksgiving. I don't want to take the risk of not saying this. Hopefully, I'll get a chance to say it again as people float in here. Uh, but happy Thanksgiving. I hope everybody has a great time with their families. It's that time of the year again, and you get that really it's hectic in some ways, getting together with the family and whatnot, travel, but it's a great time of the year just to chill and spend some time with the family. So I'm looking forward to it. And it's not at my house this year. That's a switch up. So I don't have to do a lot of work. Good stuff. All right, so we're going to keep it fairly light today. I mean, it's going to be a really busy day in terms of economic data. Let's bring that up, in fact. And there aren't many people on right now, so we'll just let people float in here. And one of the topics after we discuss the economic data that's coming out today is I want to talk about the gold-backed cryptocurrency that Max Keiser. If you're not familiar with him, he's a forecaster. I believe he's in the market of selling gold and silver. I believe, I could be wrong about that, but he certainly does have a big YouTube following. It's called the Kaiser Report. And I have a link that is in the description area below to an article that was written on Kitco. And it's regarding a Chinese cryptocurrency backed by gold. Remember that the Chinese have 20 tons of gold that they're reporting. And their goal ultimately is to devalue the dollar and have it replaced in their minds with a gold-backed cryptocurrency. I'm sure it'll be attractive. There's no doubt about that. So that we'll have some sort of a following if it's backed by gold. It's not going to be their currency, the yuan or the renminbi, whatever you want to call it. That certainly has no following, and you could expect that to be devalued at some point in time in the future, much as what they did back in the 90s. So we'll go to that article in a moment. But before we go to the futures, let's talk about the economic data that is coming out today, being Wednesday. We have the weekly jobless claims, no big deal there. Where it gets interesting is at 8:30 a.m. Eastern Standard Time. Hey, Patrick! No sound on my other computer. You can hear me now? Make sure my microphone isn't muted. My microphone is not muted, and it is definitely plugged in. You can hear me now, Patrick? Cool. And everything was good. I got your text. Everything was good at Max last night? That's good to hear. Okay. I'm probably gonna. My kids came home. My daughter came home last night from college, and my son is coming home from college today. So I'm gonna see if I can head over there for dinner to get everybody together. We haven't been together in about 3 months around the dinner table, so I may just do that tonight. So good to hear. I'm glad you had a great time. And that room that you referenced, I rented that out twice. Not rented. You know, it's actually free. The dining room. Uh, it's really great. I reserved it for my wife for her birthday a number of years ago, for her 40th birthday, and I did it another time as well. We walked in with a large group. He just gave it to us. Mark, who you met last night, obviously with the photo. Um, he and he just gave it to us. It was a busy night too, so it was very nice of him. So they're very Max Steakhouse is what we're sorry. Max Steakhouse is what Patrick and I are referring to. It's in Huntington, New York. If you ever get into town, great place. The owner there, his name is Mark. Very nice guy. All right, so let's get to the um, economic data. GDP coming out 8:30 a.m. Eastern Standard Time. Then we have durable goods. This should be interesting. That is the measure or the gauge of the production and sale of products that last multiple years, dishwashers, dryers, washing machines, etc. And it should be an interesting number in that you saw numbers out of Home Depot decline, and Home Depot obviously took it on the chin. Does that carry through into, or is it reflected in the durable goods numbers? So I'll be looking for that. CapEx orders, I really don't know what that is. Capital expenditures. Chicago PMI, interesting. Consumer spending, always interesting. Core CPI, interesting. So it's a chock full, and you had the Fed Beige book out today. So a lot of economic data out for a thinly traded market. This is going to be one light day of trading, probably one of the lightest of the year. So just be careful, and I wouldn't imagine all too much action after 2 o'clock today. It's probably going to die down right at lunch, and Friday is an abbreviated day, so just be careful about putting on long positions. They can move this market, and for the most part, it's not going to be humans in charge. It's going to be computers. Most of the town is, they're in Aspen doing their thing or whatever, and they just put the computers in charge, keeping this market in check with a bias to the upside. All right, let's go to that article. Hey, RL, happy Thanksgiving to you too. Let's go to that article. And this goes back to, I've been wanting to talk about this. China's secret gold-backed cryptocurrency to destroy the U.S. dollar. Max Keiser from Kitco News. I have the link in the description area below if you're interested. And China's big move for the 21st century is to pull a trapdoor on the U.S. by launching a gold-backed cryptocurrency that will devalue the U.S. dollar to zero, according to Max Keiser, host of Keiser Report. Now, obviously, we're not going to zero here. But remember that the Chinese have a huge amount of debt relative to GDP, far greater than the U.S. and China, and most of that debt is denominated in U.S. dollars. Wouldn't it be nice to be able to pay those dollars back in a diluted? Wouldn't it be nice to repay that debt in a diluted U.S. dollar? They have 20 tons of gold to back it with, so certainly enough rocket fuel in the tank to be able to do this. So this should be, if it occurs, a real a torpedo in the water for the U.S. dollar, and we'll see how we respond, if at all. So an interesting event here that could unfold. And when I was watching Hedge Eye Capital Management last night, and they were talking about this was McCullough and Kyle Bass. They were talking about the probability of the Chinese devaluing their renminbi, the yuan, and taking the Hong Kong dollar off of the dollar peg, putting it on the renminbi peg, and that's going to happen probably overnight, anytime now, and that's going to cause more volatility in the currency market. So a lot out there beneath the surface that could move this market. So let's get to the pre-market activity. And I don't have much in terms of requests. Unless, Patrick, you have something you want me to go over, RL? I'll be more than happy to do that. But first we'll go to the, since we're speaking about, RL, is that an acronym or is that a symbol? You got it, Patrick. I can tell you on a daily chart, I was thinking about it yesterday, Patrick. The daily chart of UGAZ yesterday looked really good. Oh, they're issuing the nat gas inventory report today? Okay. Good, because that usually comes out tomorrow. Obviously, it's Thanksgiving, so they moved it up. All right, so that's what I was concerned about. So the UGAZ daily chart looks really good. We saw that morning star formation, and We're just watching that weekly chart. We'll go over that in a moment. So we have AMRN and UGAZ. We'll go over immediately following the futures market. And for those folks just joining in, if I could ask you to please click that like button. It helps you out with the YouTube algorithm. I'd really appreciate that. Thank you very much. And happy Thanksgiving to you. If I forget, I sign off too quickly. And everybody enjoy. All right, so the dollar, very, very strong here. Yesterday's price action on a daily chart of the U.S. dollar was bearish. We saw a bearish key reversal bar. However, today, we have a new daily high on the U.S. dollar. We backed off the highs. However, we do have a new daily high, therefore almost negating yesterday's bearish key reversal on the U.S. dollar. So a new day, and the dollar is looking strong. I mean, here's where we closed out yesterday, and then when we opened up last night, we broke out, pulled back, retested the breakout point, followed through to the upside. Now we pulled back, consolidation, and I would expect that we're going to see a continuation move higher here on the dollar. The fly in the ointment is, thanks for those likes, folks. Appreciate it very much. The fly in the ointment here for the dollar is the news coming out, economic news. We'll see whether or not that moves the dollar one way or the other. When we're talking about the dollar, I usually like to segue over and into precious metals. And I mentioned yesterday that I was going to be doing a commentary with regard to the Japanese markets. I'm probably going to do that on Sunday night. Obviously, we're not going to do a Thursday night stock charts live this week. So I'll probably do it Sunday night, and we'll talk about the Nikkei index and how we see that index beginning to set up for a longer-term trade into 2020. So now to gold, we're down $2.20. Yesterday, we saw a bullish key reversal on gold. A very, very powerful day. The miners, same deal. They tried to take it down on the 25th. They failed, and we rallied off the lows. Yesterday, an outside reversal bar, a bullish key reversal. Now we're flagging out, digesting those gains. And here we find ourselves in a nice consolidation, and we're looking for a breakout now. So gold, while down this morning, is simply digesting gains. It's expected, and we're looking for a continuation move higher on gold. Now, if we close out the week where we're at or better on gold, and as well on silver and the miners, that sets us up very, very strong for next week. So it appears as though at current, depending upon, again, the economic data, that the options that we sold going into the end of this week are expiring on Friday. They should expire worthless on the NUGT, of which we are long. And I'll maybe not close out the 40s going out into December, because if we close out again where we're at or better on a weekly basis on gold, silver, and the miners, I could see us breaking out on a weekly basis fairly soon. So I'm becoming more and more optimistic on these trades. So we'll be looking to build more on these positions. And I'm actually in the market for buying the physical silver, and that could be as soon as today. I'm looking at the price through Shift Gold, and they're quoting me right now. And I'm looking at either the 10-ounce bars or the 100-ounce bars. I haven't decided yet, but I'll be sure to show it when I do buy it. I'll do an unboxing of my silver. All right, so let's take a look at silver. Silver as well had a very strong day yesterday. Again, these are all 4-hour charts, and if I haven't already mentioned it, a very strong day. And you saw this beautiful outside reversal bar. You could picture it. They were flirting with putting in a lower high, and it was rejected. They dropped it back. Buyers moved in, And all you need to do now is simply draw your lower band of support, and that should be a nice support level from which to buy off of. I don't know why I'm making that green. It should be support. And there you have it. Not quite a bull flag setup, but we do have an upper band of resistance, of which we broke out above it a few minutes ago, 16 minutes ago. So we're beginning to break out yet again, 4-hour chart on silver. So silver looking good into the open, even though it's down over a quarter percentage point at current. Sticking with commodities for a second, let's go with the theme. We have nat gas inventories coming out. We'll go over UGAZ in a moment, but we'll first take a look at nat gas spot price, see how it's behaving this morning in advance of the report. We are up. All right, so what we have here is a nice setup in that what was resistance is now support. And what I'll do here is I'll edit this up here a little bit to illustrate. So this dashed line is a secondary prior low upper band of resistance. Now it's support. And here's your primary up here, because that a close above this level would put into jeopardy, and it's good for longs, jeopardy us taking out the prior high. It sets us up for a continuation move higher versus the highs of the 24th. Now, we did break out. This was resistance, this dash line here. We broke out on the 22nd, rallied, pulled back, broke back down. Yet we didn't take out the prior lows on a closing basis. We did on an intra-period basis, but then we bounced back, broke down yet again. Very volatile here. But now we have yet again recaptured support, held it, retested it. Now what we're looking for is a continuation move higher on this 4-hour bar versus the prior 4-hour bar, which closed about 17 minutes ago. So nat gas is stabilizing here, building a base, looking good. It had a rough go of it yesterday. But we did rally off the high. Rally off the lows, sorry. A little bit early. RSI, higher lows. Nice W formation here and a higher low versus these prior lows. So the indicators are improving. The price action is improving on a 4-hour basis. We'll go to the daily chart and weekly chart of UGAZ in a moment. Let's take a look at light sweet crude, because the energy stocks are becoming interesting. They had a rough go of it yesterday. Oil's up this morning about a quarter percentage point. Now you need oil to bring the energy sector up. You don't necessarily need nat gas spot to bring the energy sector up, but you do need oil. And if you do an overlay of the XLE versus oil, you could see that they trade tick for tick, and they also trade tick for tick for the junk bond market. So oil this morning is doing well. The energy sector did not have a good day yesterday. So we'll keep an eye on the energy sector, see whether or not there's a trade to be had there. We are attempting to break out on a weekly basis on energy, and that's probably why we're seeing some trepidation on the part of longs. Now, 4-hour chart of light sweet crude, looking good here. Let's pull back for a moment. I know it's difficult to see, but you could see that we broke out above last week's highs. Here was the high of last Friday. 57.54 the high. And we're well above that now. So oil in the pre-markets looking very good. And again, I mentioned this, I believe it was yesterday, that the weekly chart of crude is looking really, really good here. And we have a bullish reversal bar. And it appears as though we are going higher on crude oil. So there are those out there that want to short oil. I would not short oil. I think that the path of least resistance is to the upside. You're building momentum, and at some point in time, you're going to get a short squeeze here, especially if the U.S. dollar pulls back. And think about it this way. Oil is priced in U.S. dollars, right? So if the dollar pulls back, you see an increased bid under oil. Think about this. Oil, the dollar is up this morning, yet so is crude in a very big way. We're up over a quarter percentage point. So that speaks volumes about the underlying strength of crude oil. And if the dollar pulls back, well, then you're just going to see oil really begin to pick up speed. So oil, I'm very bullish on. And we'll take a look at the XLE as well here in a moment on a daily basis. And now let's segue over into the stock market futures. Oh, in fact, before we do that, I want to go to Bitcoin. Bitcoin's becoming interesting. Oh, it's down this morning. It was looking good last night. Because we had broken out above support. We gave it up overnight. All right, so Bitcoin, forget about it right now. It's not behaving well. They're trying to rally it off the lows. I wouldn't buy it right now. It gave up support. We move on. Okay. The S&P 500 up yet again. This is going to continue. They're going to melt it up. Very thin volume. Just understand the underlying drivers here. It's computers, light volume. All they need to do is keep hitting the ask, and they can keep this market moving up higher, drip by drip, melt it all up on very, very thin volume. Don't get lured in with a large position here. And at some point in time, we are going to get a pullback. And volumes of late, very light on the S&P 500 yesterday. It was good on the Dow. I think that was driven by Disney in particular. And this morning, S&P 500, you're seeing the S&P 500 up just shy of a quarter percentage point. But we are flirting with that third standard deviation Bollinger Band yet again. And at some point in time, that's going to get tired. And we're going to get a dramatic pullback here. And at that point in time, if we hold support, we can get long. If it doesn't hold support, well, we'll reevaluate whether or not we want to short the market. I don't see that happening in the short term, shorting the market. But you never know. We want to keep an open mind. The S&P 400, the mid caps, looking good here. We continue to press higher. You can't fight this market. We're up over a third of a percentage point. The Russell 2000, again, up. And it appears as though we will probably take out yesterday's highs. The only caveat here is that yesterday, and I went over this last night on Market Wrap, we saw I wouldn't call it a reversal bar, but we did see some topping action on the Russell 2000. It's a sign of profit takers above. Beware. All right, so we have an ascending wedge formation. And I wouldn't be the least bit surprised to see this resolve to the upside. So again, I don't want to fight this market to the short side. In fact, we did some buying yesterday, and we'll probably add more to that trade. Maybe this week. I doubt it, though. I'd rather buy on a non-abbreviated, a higher volume week. So I'm satisfied right now. We restuck our foot back in the water on a breakout yesterday of a leveraged ETF, and we'll talk about that more on the week ahead commentary with members, and it's on Market Wrap, the analysis of that trade last night on the members area. So you can go check that out, members. What else do we have here? 10-year yield, a bond price, 10-year bond price. Always want to check that out. All right, so yesterday was a very good day for bonds. You saw a breakout on bonds yet again. And this morning, while down marginally, I mean fractionally down, we're flat on the day. We are holding support. We're consolidating. I think that we're going to get a breakout. If we get a continuation move higher today on the 10-year yield, you'll probably see a rally back on precious metals because they have been trading, for the most part, in tandem with precious metals of late. And you'll want to keep an eye. If yields decline, because if bonds rally, yields pull back, you'll want to keep an eye on the strength of the U.S. dollar. Are we beginning to peter out? Right now, it looks like they're both okay, the bond price and the dollar. So if we see a pullback on the dollar and a rally in gold, therefore a pullback in yields, you're going to see a rally, a stronger rally on gold. You're going to see a stronger rally on silver as well as oil. So watch the commodities complex. It's beginning to stabilize and pick up speed, and that's despite a stronger U.S. dollar. My voice is beginning to go again, folks. Sorry. So keep an eye on it. It's very, very interesting stuff what's playing out here. And something's going on that you're seeing a bid under commodities, and we'll probably do a deeper dive into the commodities complex over the weekend. We'll talk about it on the week ahead commentary and on Sunday Night Futures Live. And for those just joining in, if you could click that like button, I'd really appreciate it. Thank you very much. And what else? Happy Thanksgiving. I don't want to leave without saying that, to make sure everybody said it to everybody. And enjoy the time with your families. All right, so back to the dollar. Still looking good. A little bit of selling moving in here. I wouldn't worry too much about it. We'll see how we close at 9 a.m. Eastern Standard Time. All right, let's go to those symbols. We will use good old Trend Spider. Okay. All right. Patrick, UGAZ. All right. So let's go to the weekly chart. Okay, so Patrick, here's what I mentioned yesterday, and if there's one concern I had with UGAZ, it's the fact that we are trading at current, down below this lower band of support. So that is and I know you're positioned long in it. I'm assuming that you didn't sell your position. So that's a bit of a concern to me. If we close down below this lower band of support, that makes me nervous. Is there a possibility of next week we rally back in an effort to try to recapture? Sure. Would I want to take that risk? Probably not. I would be nervous about staying long over the weekend if we close down below this lower band of support on a weekly basis. RSI, if you drill down here, it may be difficult to see. We are trading down below the lower band of support on RSI. Stokes rolling over. Maybe we'll get a higher low here. We don't know. But the weekly chart, I'm not loving it in that because we simply broke. We broke support. Not one support level. You can do this by two measures. Where are my trend lines? They changed this up here. What do we do here? Trend Spider, you moved all my stuff. All right. Drawing tool was my... Here we go. Okay. So we have our new support level. If you're looking for a stop, I know this is more of a short-term trade for you. So I may be just beating a drum with you. But for those that may be interested in UGAZ longer term, I'll elaborate a bit more. What you'll want to see is definitely, if you're looking at this as a long-term play, definitely a hold of 11.80. I would keep a stop loss right below that level if you're looking at this longer term and you have a little bit of wiggle room before you want to stop out. But if we break 11.80, you got to get out. Or me personally, I can't give advice. Me personally, I would get out. So going to a daily chart, here's where things become a bit more bullish. This is akin to an evening star. It's not a doji formation, but I'll still call it that, like a morning star formation, in that we gap down, yet we close to reverse off the lows of the day. So while not necessarily a net bullish day, because we did close down, we've closed positive, so you could divine that there's indecision, right? If it was a doji star formation, you'd definitely be saying there's indecision. I still think that with this price action, you could still say there's indecision. What's the value of having indecision when you're in a downtrend at current? An indecision when you're at the bottom of a trading range usually implies that you're going to get a counter trend move. So I would expect to see a move higher here on UGAZ and probably a filling of this gap. And that's at around, I think we discussed it yesterday, around the $13 per share level. Just shy of that 12.96. And I would look to, as a short-term swing trade, I would look to book profits into that rally. If you wanted to make it even quicker and lock in those profits at a support level, or a resistance level, I should say, that is nearer the money at current, look at 12.68 as being a resistance level number one. Then resistance number two is going to be that 12.96. So those would be my lines in the sand to look to book profits on UGAZ as a short-term swing trade. And obviously just use a stop under yesterday's close. Keep those losses small. Good for you, Patrick. Lowborn, how you doing, brother? Top of the morning to you. Top of the morning to you. That's one of my sayings. Thank you for joining. Okay, 2RL, AMRN. Let's do the same deal here. Let's go weekly and work backwards. What are these shares priced at? In the 20s? Man, this thing was a penny stock not too long ago. I'm just going to pull back to a monthly chart to get a better feel of where we've been. All right, so a lot of history here. What sector is this in? This thing trades like a biotech. Okay. So I just threw up here a monthly resistance level. It was resistance going back to May of 2011. Now, oh, it is biotech. All right, that makes sense. Okay, it trades just like one. Okay. Um, so 19.91 is support going back to 2011, and we've been trading comfortably above that level sporadically for quite some time now, going to October of 2018. And we're working off this massive run up. And I make the assumption that they had a good announcement, some FDA approval or whatever. So what I would want to do here right away, RL, is I want to know, are you long of it? You looking to add to it? Hey, Sam, how you doing, buddy? Happy Thanksgiving to you. Sam's over in Italy. I'm always jealous of that. We'll take a look at it. You want to go over Baba? I haven't seen it. You're long of it? Okay, cool. Now I know how to think about it. All right, so RL's long of it. As a matter of fact, I want to know when we break through it as well. Since we're using a monthly chart, let's keep it active for the next 25 days. All right, so from a risk-reward perspective, I'm not sure what your basis cost is, but just using a monthly chart at current, and we could tighten up the stops as we drill down to shorter duration time frames. But from a monthly perspective, this is critical support here at, let's call it $20 per share. Let's just round it up. $20 per share. It needs to hold that level. Actually, I'm sorry, 1987, the share. Let's move this down a little bit. Okay. Good. All right. Drilling down. So must hold this level. Critical support. Weekly chart. All right. So here's that monthly support level right here. And you can see that we are dancing right within the sensitivity zone of that support level. So again, we want to see a close above the support level. From a risk-reward perspective, it's looking interesting because I know that if I bought here, I need to put my stop right below, let's just say last week's lows. Give a little bit of room here, not too much. And if we close down below the support level, we're out. We could be seeing, I don't like the fact they put this toolbar here. I got to see if they can edit this, or I can edit this. We're seeing higher lows, sloppily joined, but you get the idea. Higher lows in RSI, possibly. Stokes are rolling over here, and traditionally, they roll over. So just be forewarned, meaning that it gets ugly when these Stokes roll over. Maybe they'll flatten out and hook back up again. You never know. But at current, what I would concern myself with is forget about the indicators. Forget about them. Worry about price. As goes price, so should go the indicators. Daily chart. All right, so again here, let's go back to a monthly view. For whatever reason, that alert is not showing on my daily time frame. All right. So for a shorter duration trade, I would still keep that alert alive. Sam, you always say that. I know about you over in Italy. Trust me, Sam, I'll probably keep saying it. I'm jealous of you. You're over in Italy. What kind of temperatures you had there? All right, so RL, awaiting decision FDA approval, end of December. Yeah, that analyst downgraded. Yeah. I get nervous about owning individual biotechs, but this sector is in fuego right now. There's no doubt about that. All right, so a good risk-reward entry point here. If you buy it today, just keep a stop again, right below the support level at around 1980 per share, 1987 per share. Look to add on a breakout above this upper band of resistance. Stokes is setting up nicely here. We did break down. We are holding the 50 level. Same deal on RSI. So it's looking good here. I mean, it's had a rough couple of days, but it had a great week last week, right? Or earlier in the month, I should say. A great rally here. Became overbought. All it's doing is consolidating gains. No big deal here. I like the chart. Looking interesting from a risk-reward perspective. By the way, Deutsche Bank, I had read everywhere about its problems with derivatives. They're probably one of the biggest derivative carriers in the world. Yeah, there's speculation out there that one of the banks at the Federal Reserve is helping backstop is Deutsche Bank. Who knows? Probably, in this age that we live in, we probably are. So, getting back to the charts, AMRN looking good. And with that, folks, I think that is it. Yep, that's it. I'm going to wish everybody a very, very happy Thanksgiving. Thanks for joining in, as always, this early in the morning. And please, if you could, hit that like button and just really have a great time with your family. Enjoy, relax, and I will talk to you on, since we're not doing Thursday night stock charts live, I will probably do a swing trading today on Friday. We'll see how that goes. But again, everybody have a great Thanksgiving. And same to you, Patrick. Be well.